Hey, gang, Carl White here, broadcasting here in the studios today in the secret headquarters of the Mortgage Marketing Animals. And you are listening to Loan Officer Freedom, number one podcast in the world today for loan officers. And thank you for helping make that happen. Hey, I got a great topic here for you today, and I am calling it Rates Going Up, the Sky is Falling, and Other Distractions. So before I do that, hey, I just want to thank you so much for all the kind reviews. And I'm going to read one here just real quick to help inspire you to do the same. This came from Joe Breeze, and Joe says, hey, great listen. Carl brings value to every episode through honestly sharing his plan for success, a plan that can be followed by anybody who puts in the effort with great attitude. So, Joe, thanks so much. Appreciate you leaving that review. And Joe, if you'll contact the office along with anybody else that leaves a review, I've got a great ethical bribe for you today that if you leave a review, good or bad, right? I'm just looking for an honest one. Take a picture of it and then email us a picture of that review. I'm going to send you my brand new book. I'm going to give it away before you can even buy it. It's Artificial Intelligence and the Loan Officer. So it's a book that myself and Tammy Schneider wrote about artificial intelligence specifically to the loan officer. It's loaded with resources. You're going to love this. And I'm going to give you a digital copy of it before you can actually go buy it. So how you do it again is just leave a review and then take a picture of that review on whatever platform you listen to this and email it to us at support@themarketinganimals.com, support@themarketinganimals.com, and I'll send you a digital copy of the book. I'll email it to you. I'll text it. I'll text you a link where you can download it. And you're really going to like this book. It's a great, great, great resource. So, all right. So that's support@themarketinganimals.com. And the book is completely free, even before you can buy it. All right. So rates going up, the sky is falling, and other distractions. You know, it seems like every 5 minutes, there's a Zoom meeting or a video going on about rates going up or inventory is down and other things that you, me, and Pharaoh's Army can't do a thing about. Right. So it's not that those conversations aren't important. It's just that they're not a function of my activity that actually increases my market share. You follow me? So those conversations don't affect my market share at all. Right. So, I mean, it might help for my own personal investing in the stock market. But for my mortgage business, those things are what they are. I mean, and they're that way for all other lenders. So like it's a level playing field, even if the playing field is at altitude or maybe the oxygen is a little thin, it's thin for everybody. I think that's a really big point. And I oftentimes think that when I do focus on those things, it's really me looking to not do those activities that actually make me money, like doing the actual activity that makes the phone ring so we can take yet another application. In other words, I think that when I find myself looking at those things, it's a thing called creative avoidance, where I'm creating a reason not to actually work in my mortgage business. You follow me? Because look, those things are what they are. I've got this saying, it's like control those things that you can control. Control those things that you can control, and that's where our business goes up. When I start looking at things that I have no control over, and frankly, they're the same for everybody. If it goes up, it goes up. If it goes down, it goes down. It doesn't change my market share at all. So people say, well, Carl, what do we focus on? I find primarily, and there are probably more, but I came up with 3 to share with you today. So these are the 3 things that I would focus on. And as a branch manager, one of the top branches in the nation, this is exactly what I tell my loan officers. Number 1 thing to focus on: sell what's on the shelf. Sell what's on the shelf. Look, the vast amount of time, we're all selling the same programs and the same rates. Look, nobody's got magic money. Sometimes I'll see a Facebook group page. Somebody goes, well, I'm at 0.2% today. It's like, yeah, whatever. We know that's not the case. Nobody has magic money. If my rates go up, well, so does yours and everybody else's. If my rates go down, well, so does yours and everybody else's. So I would say some of the time, or some of that time that you may spend on charts and graphs, well, frankly, they're just guessing at what rates are going to be like, say, next December, right? So I'm going to spend that time, instead of looking at charts and graphs about what rates might be in December, I'm going to spend that time getting more customers and selling what's on the shelf, both now and in December, by the way. And by the way, whoever focuses on getting more customers, guess what? They get more customers, right? Whoever focuses on getting more customers, they get more customers. Whoever focuses on what rates are going to be in December, it doesn't even matter. Like, it's just a guess on anybody's point. It might be a very educated guess. It might be a predictable guess. I just find that doesn't help me get more customers. It doesn't help me take yet even more applications, right? So number one, sell what's on the shelf. In other words, whatever you got for rates, that's what you got for sale. You can't, me, or Pharaoh's Army is not going to change that. Number two thing to focus on, keep your eye on profitability. This is a biggie. I've seen a lot of people screw this one up lately. Keep your eye on your profitability. Here's the thing. Some months, some seasons, and some years, we sell more loans than others, right? Just the way it works. When we close a bunch of loans, we need more help and we need more resources. When we close fewer or less loans that season, well, we need less help and less resources. As a general rule of thumb, I have 5 to 7 loans per full-time employee. So in other words, for every 7 loans, I've got a full-time employee, like maybe a loan partner as an example, maybe somebody helping me answer the phone. Those numbers keep us very profitable, 7 loans per full-time employee. So those numbers keep us very profitable, yet leaves breathing room in my teams and assistants schedule, so that at the end of each and every call, when they're talking to the listing agent and the borrowers, our team members can ask for yet even more referrals on every call. In other words, if my processor is so busy and so loaded up, when she's talking with that listing agent, she doesn't want to ask for more business with the listing agent because she's already overwhelmed, right? You don't want that, right? So you want to make sure that your team has breathing room. And I find that, 7 loans per full-time employee gives your team a little bit of breathing room. And guess what? When they asked for yet even more referrals on every single phone call they're making to my borrowers and co-borrowers and listing agents and referring agents and the buying agents, when they ask for yet even more referrals on every single call where they're talking to one of these people, guess what? We close more loans, right? We close more loans. Now, if they're too busy to use our, what we call new way to say goodbye script, right? New way to say goodbye script. If they're too busy to use that new way to say goodbye script, which is the script for asking for more business, right? To get more referrals. If they're too busy for that, if they're too busy to use a script for getting more referrals from those people we're already working with, well, that's costing me way more business than rates going up or down, guaranteed, right? I've been doing this for decades, and I find that's the case. We just need to simply be asking for more business, well, whichever the rates are going up and down, and our team has to help us with that part. And if I also, on the other side, if I have less than 5 loans per full-time employee, well, somebody's going to have to get laid off, right? I don't want to lay anybody off. Nobody likes to talk about this stuff. But here's the thing. If we don't lay somebody off when we have less than 5 loans per full-time employee, look, the whole company, everybody's in jeopardy of losing, our business, our job, 90 days from now. Like, everybody goes away. You can't kill the goose, right? So you cannot operate a business without a profit for very long at all, right? You'll go out of business, right? Then everybody doesn't have a job. I hate laying people off, right? I'm sure, Quicken and, those the big box companies, when they laid off thousands of people, I'm sure they didn't look forward to that. But if they didn't do that, then there is no company, and then everybody loses their job. So focus thing number 1 is sell what's on the shelf. Like, whatever you got, whatever the rates are, whatever they are, that's what you got for sale. Sell what's on the shelf. Number 2 was keep your eye on profitability. Number three is you have to save 25%, right? Save 25% of your net check. In other words, after taxes, after when you get your paycheck, whatever's written in that box that you could take it to the bank and receive that money in cash, save 25% of that. I'm going to tell you right now, this part has saved my butt more than the other two put together. For the last decade or so, the lovely Mrs. White and myself, we've saved 25% of net. In our case, actually more than that, but this 25% of net, right? Even in the good, even in the bad. Even back in 08, like during the crash, we always saved 25% of net. So whatever's on that paycheck after taxes, we've saved at least 25% of that each and every month. Was it easy at first? No, it wasn't, right? It was freaking hard at first. Now that I'm sitting here, just being transparent with an 8-figure net worth, am I grateful that we saved that 25%? Yeah. And I can tell you, most of the wealthy friends that I know, it's not because of how much money they made, it's because of saving their 25%, right? So even if it's tough, do it. Rates go up, rates go down. I still live in a nice house, still drive nice cars. My kids live in nice houses. We go on dream vacations. We support 4 other families, 2 completely, off of, I don't want to say charity, but off of just wanting to help people out, just like people have helped me out. Sometimes in my life, early in my life, when I needed help, people helped me out. We return the favor now, right? It's back to the karma thing. We built a center for abused women in Colombia, South America. We just opened up a coffee shop in a little town in South America to help benefit the local community and giving that money back to the townspeople. We set up scholarship for kids that otherwise couldn't go to college. We've given large amounts to many charities. We pay cash for cars for single mothers sometimes that needed one. We helped another single mother buy a house. And my company's on very, very, very solid ground because I focused on the profitability and I saved my 25%. And again, I debated about bringing these last part up because I'm not sharing these things to brag, but I want to inspire you to focus on where the real money is. While most people are looking up to see if the sky's falling, I'm sticking to the proactive activity that actually sells more loans and helps me be more profitable so that I can help more people, right? That's how this works. It's not all about, gee, I want to drive a Ferrari or whatever that thing is. I'm not a car guy myself, to be honest with you, but it's not so I can have another, I don't know, whatever, Rolex watch or another, like whatever that thing is. It's so we can help more people, right? That's for me at my stage of the game. That's really the driving force. So those 3 things I can control, right? The saving 25%, keeping my eye on profitability, selling what's on the shelf. I can control those 3 things. And those 3 things have made rates going up or going down a simple inconvenience and certainly nothing to sweat about. Sell what's on the shelf. Sell what's on the shelf. So, hey, so this is Carl White. Thanks a lot for letting me be part of your day. Again, leave those reviews and take a picture of the review. Email it to us at support@themarketinganimals.com, support@themarketinganimals.com. And I'll send you my copy of my newest book, of Loan Officer and Artificial Intelligence. I think it's the first book of its kind so far in our industry, and I'd like to give you a copy. Just leave a review. So I think that's about it. Hey, if you want to help you walk through on how do we generate more leads, how do we make more offers, how do we become more profitable, how do we where do we get our help from, any of that stuff whatsoever. We'll have a conversation with you, the exact same conversation we have with our Freedom Club coaching members, which is a high-level private loan officer coaching program that I'm honored to be a part of, and would love to give you a free 45-minute coaching call, no cost, no strings attached, no gimmicks. And if you just go to freedomclubdemo.com, I'll give you one in addition to the Loan Officer AI book. And freedomclubdemo.com. A lot of .coms here on this episode. Maybe I should have just done one, but look, I just want to help you. And there's a couple different ways we could do it. So I give you both ways. So thanks a lot. I appreciate you. Forward this to three of your favorite loan officers, and control those things that you can control. Control those things you control. Thanks a lot. We'll talk to you when you call in. Bye-bye.